The opinions expressed in the following program are provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own real estate agent with questions or concerns. The following is sponsored content.
Welcome to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Eleni Akrivos on CJAD 800.
Welcome to The Real Estate Show, everyone. I'm your host, Terry Kilakos, chartered mortgage broker and president of Northeast Mortgages. Thank you for joining me. In studio with me, we have my beautiful co-host, Eleni Akrivos, chartered real estate broker and president of Northeast Realties. Welcome, Eleni. How are you?
I'm great, Terry. Thank you.
You having a good weekend?
Awesome.
Great. Today, we're going to be talking about the role of a mortgage broker and some things you should know. So basically, what's the differences between a mortgage broker and actually going directly with a bank? Why do some real estate brokers prefer one to the other? And all that kind of fun stuff. Don't forget, you can always reach us at the office by calling 514-680-4674, or you could visit us online at northeastmortgages.ca. As well, if you haven't done so already, please take a moment to subscribe to our YouTube channel, which is newsonthego.ca. All of our shows that we do here at CJAD are actually recorded. They actually broadcast live on Facebook, and they're recorded, and they'll actually get aired on our YouTube channel. And we get a lot of positive feedback. I mean, from what I understand, Eleni, you've had a couple of positive comments lately about that as well.
Yeah, it seems that people are enjoying getting, the mortgage advice, which, people call in for, as well as the real estate. Sometimes we have two different angles.
Sure.
So, yeah, people have
100%.
Good feedback. Thanks.
So, is there anything new and exciting before we kind of get into the fit of the show? Is there anything new and exciting happening?
You know what? It's the same exciting stuff happening, which is, we're leading Canada in terms of the real estate market, right? We know that Toronto and Vancouver has gone down a little bit, where Montreal, this is our time. This is our boom now.
Right.
So we're talking about sellers markets in mainly English areas. There's still opportunities to buy stuff, guys. So you know what? Get your pre-approval, look at your budget. If you're, been sitting on the fence the last year or two, I've been saying it now for a couple of shows, don't wait. If you're thinking of buying, in the fall, start now. Get your pre-approval done now with a mortgage broker, and we're going to talk more about that. And start looking. See if there's a type of property out there that's right for you.
100%. And it's, that kind of echoes along with what we've been seeing on the mortgage side. So on the mortgage side, we've seen a drastic increase in the amount of people that are actually coming in for pre-approvals right now. As well, a lot of people are coming in because mortgages are coming up for renewal. I forgot what the stat was, but there's an extremely large amount of mortgages in Canada right now that are up for renewal this year. I think it was something like 40% of the Canadian mortgages, which is a very large number. And the interesting thing is that when we look at what's happening with interest rates, banks tend to try and take advantage of you, right? So they're going to send you the renewal documents, and I've seen all kinds of renewal documents come in. They're going to come in with a ridiculously high rate, and then they're expecting you to call them and start kind of negotiating with them and haggling with them and all that kind of stuff. So people are kind of fed up of that, and so they just call us directly and they say, our mortgage is up for renewal. What can you do? Can you give us a better rate? And we do, we're going to look at this a little bit more in detail during the show, but that's actually just one little element of what is really needed, or what we do as mortgage brokers. So we're going to get into that a little bit later on. So this is one of the things that we've been seeing right now. A lot of people actually coming in for pre-approvals. The market is crazy hot right now in Montreal. I have had clients where they will literally put an offer on the table, and as soon as their offer starts to go in, there's another 2 or 3 that'll come in. I've seen property selling over listing.
The multiple offers. So we're going to do another show about that and how to handle multiple offers and navigate the market right now. But talking about the mortgage situation that you're talking about, the banks and the mortgage brokers, let's get into it. Okay, so what does it mean really for somebody to use a mortgage broker? versus, using a bank, right? Because I know you talk a lot about it. You give people a lot of education about that. I think that's what people really, that's what they ask themselves. They get that renewal letter. Do they just sign it? And what's the difference if they just negotiate with their bank rather than coming to a mortgage broker?
So the first thing that you need to understand is the fundamental difference between a mortgage broker and, a mortgage specialist that works at a bank. At the end of the day, mortgage brokers will ultimately secure your mortgage through a bank or a financial institution or private lenders or alternative lenders. But that right there, what I just said, is the fundamental difference. So you go to Bank ABC and you meet with Bank ABC's mortgage specialist. The mortgage specialist that you're going to meet with is a salesperson that works for the bank. That's it. There's no formal education for it. There's nothing other than they get together at the beginning of the week. The branch manager or the directors will say, hey, we need to sell more lines of credit. And then these guys are put on a mission to sell more lines of credit that week. So they are basically pushing products that are in the bank's interest as opposed to your interest. When you go to a mortgage broker, on the other hand, it's very different. So the first thing that you need to understand, we actually have a formal education that we have to complete, much like real estate brokers and the majority of professionals. Then we have to pass government issued exams. Once those government issued exams get passed, then at that point you go and you get yourself licensed. Once you're licensed, now all of a sudden you have to get errors and omissions insurance. So it's a profession. It's not a job that you have at a branch, right? At a bank.
Huge difference.
It's a massive difference.
And I think what you just said is what people don't understand.
Exactly.
So the mortgage brokers have a license.
That's right.
Which is what you just said. The person at the bank does not have a mortgage, quote unquote, license. They're an employee of the bank.
Exactly. And so when a client comes to see us and we're kind of, we sit down with them, it's not one specific bank or one specific product that we're actually looking to put them with. We're looking at what is actually going to best suit them. And sometimes it's related to the interest rate, and sometimes it's related to conditions, and sometimes it's related, to something completely different, because there's different things for different people. A mortgage is not a one-size-fits-all product. Banks want you to believe that. Used car salesmen, and no offense, I'm said that, and I'm like, I'm offending used car salesmen, but it's this whole idea that a mortgage is a one-size-fits-all product is completely wrong, and people have to get over that. A mortgage is not about interest rate. Listen, we at Northeast, last year we did about $300 million in mortgages. We have a lot of weight when it comes to negotiating rates. You will have the best rates, but the rate is secondary, if not third or fourth in the list of priorities that we need to look at when we're approving that mortgage. We got to look at penalties. We have to look at conditions of the mortgage. We have to look at whether or not you want to buy or sell, you want to sell that house down the line.
And just to interject, the bank doesn't look at that stuff.
Exactly. Do you want to rent it? Are you thinking about, moving into it now and then moving out of it later? These are all very important facets. How is your down payment structured? Is your down payment structured correctly? Did you know that if you don't structure your down payment correct, it'll cost you tens of thousands of dollars over the term of your mortgage? Yeah. Do you want to take a 1 year, a 2, a 3, a 4, a 5? Are you planning on going longer, maybe a 7 or a 10-year term, which exists? A lot of people don't know. Mm-hmm. Do you want to go fixed? Do you want to go variable? These are all elements that we have to look at. And if we're not looking at it, at that point, we're.
And I think you've echoed what my clients say, and what actually helps real estate brokers do their job more efficiently is when our clients do sit down with a mortgage broker. It just works differently. It's not the same.
Absolutely. Next, we'll be talking about the most important factor to look at when you're choosing your broker. Now we'll take a quick break, heading off to the CJAD Traffic Center.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Eleni Akrivos on CJAD 800.
We're back with the Real Estate Show, and today we're talking about facts versus fiction. What does a mortgage broker really do? In studio with me, we have Eleni Akrivos, and don't forget, you can always reach us at the office at 514-680 4674, or you could visit us online at northeastmortgages.ca. And if you haven't done so already, please subscribe to our YouTube channel, newsonthego.ca, where you can see all the fun stuff that happens behind the scenes when we're actually on the air. And for those of you that have been listening to this show long enough, especially during the years when I was doing it with Dan, you tend to hear me breaking stuff randomly. Or ranting. Yeah, I get on my rants too. So
it's all good. It's all good.
So we were talking about kind of the differences between mortgage brokers and mortgage specialists.
Exactly.
Yeah.
I think people have a lot of misconception, and that's why it's important, to get this information out there. I think even some people feel or think that mortgage brokers charge for their services. I mean, you went into a little bit of the services that a mortgage broker, offers in terms of how they look at your file. And for me, that's the most important thing, that they look at the file in a holistic way. They look at your credit, like you just said, down payment. Are you selling? Are you not selling? It's not just, well, here, you need a mortgage, A, B, or C. That's right. Not what it is. Yeah. So does a mortgage broker charge for all these services?
No. So the service is free. For the most part, I'll put a little asterisk on that. So when you're looking at your typical real estate transaction, so, you're buying a condo, single family home, duplex, triplex, fourplex, anything like that. It's a standard type of a transaction. Our services are free. There's no charge. Even in many cases, even if you have bad credit and we need to put you with an alternative lender, we don't charge for our services. Now, there are mortgage brokers out there, and that's why I'm putting the asterisk, that do charge. And if you look at the history of mortgage brokerage, originally, it used to be kind of, because this is where the misconception comes from, right? So mortgage brokerage was kind of like these last ditch effort to actually get a mortgage, and the mortgage brokers would charge. That's not the case right now. And it's certainly not the case at Northeast. I mean, for us, our client base ranges from, people at the lowest end of the totem pole, at the lowest end of the spectrum, all the way up to, some of the wealthiest families in Canada. Okay, so literally we have this massive spectrum. And for us, everyone's treated the same way, whether you're at one end or the other. There's no charge for our services. Our services are free, and we try and help. Now, where would you pay a mortgage broker if you're doing a commercial transaction? So let's say you want to go and buy a strip mall, or you want to do something along those lines, and you come and you want to use our services, then at that point, in some cases, there's a charge. If you're going with a multi-unit residential, where we're talking above 8 doors typically, okay? So you're going, you want to buy a 12-plex, you want to buy a 100-unit building, it doesn't matter. Now at that point, there is a possibility that you will get charged. And even in those cases, we've been able, in some cases, to get away with not charging. The other options, the other times that you might see fees or charges would be if we're going with a private lender. So you come to us and you say, hey, well, you know what, I don't have... I need to go with a private lender. My house is in foreclosure. There's some sort of an issue that's occurred, which unfortunately, I wish I could say that it doesn't happen, but there is people with severe financial difficulties where houses are in foreclosure and there is issues. And in cases like that, there is fees and there is charges associated to it, mostly leaning towards the lender side, but even on the brokerage side, in some cases, there'll be a charge. So the majority of transactions, I would say 90%, no charge. You'll probably get about 10% that you will get the odd charge here and there that might come in.
But speaking of the private lending that you're talking about, I mean, first of all, that's something I do not think the bank offers, right? No. And, and maybe that's part of the reason people do think that, I'm only going to go to a mortgage broker as a last resort if I don't qualify at the bank. But we've already seen that there's other services involved that mortgage brokers offer. So in essence, a mortgage broker, I mean, they do get paid. Let's not kid ourselves. They 100%. Get paid by commission, but not necessarily, from the client. But also you are able to offer things that the bank cannot offer. And so it could be private lending. It could also be, yes, if, for example, I think we've seen it at our office. I've seen it with my clients. They went to the bank. They did not qualify at the bank. They came to our office. They went to the broker, a mortgage broker channel, if you will, and they were able to get a mortgage.
Yeah.
So it's not, I wouldn't say it's the main reason to come and see a mortgage broker, but it's something that people think about. They think if you only go to see a mortgage broker because you cannot qualify.
Yeah, well, for us, I mean, fortunately for us, I mean, we've built a big enough name for Northeast over the years where we have, we're the first, kind of the first responders. So when somebody thinks about a mortgage, they naturally will come to us. Okay. So, a lot of times people don't go to their bank, even they'll come directly to us. But yes, you are correct. We've actually seen people where they'll go to the bank and for one reason or another, the people at the bank miscalculate something. They don't look at things correctly.
Or structure
correctly. And then by not structuring, not looking at things correctly, then they don't qualify over there, but then they come to us and we say, well, we could do it. We could do it like this. The other thing is that you got to understand when you're going to a bank, the bank is going to sell you, again, one type of product. They have a certain set of guidelines that need to be followed, certain set of rules, certain set of parameters, right? And that's their box, and that's fine. They like to live in that box.
I feel like the client has to fit into that box.
Exactly.
Or else, and that's where I think we have seen some people, again, not qualify in that scenario.
100%. And so because you end up having these very specific boxes, now you end up coming to a mortgage broker, and the mortgage broker, rather than trying to get you to fit in one specific lender's box, we find a box that actually fits you, and it works. I mean, honestly speaking, it's what has kind of given us our reputation and what has helped us over the years to kind of, build from nothing to like over $300 million of mortgages.
Yeah. I think it's not a one size fits all. Honestly, I think, over the years also mortgages have changed.
Yeah.
I mean, correct me if I'm wrong, from the time, I don't know, our parents went to do a mortgage to now, I mean, so many things have changed. So, I mean, and it's just, I think, even more complicated than people feel. It's not even just fixed or variable. It's not even just about the rate. It's more, right? There's more intricacies. There's just more, more information involved that I feel like maybe they're just not getting at the bank.
Have to understand also is that there is, on the mortgage landscape, I mean, we've seen the government come in and they've changed rule after rule after rule.
How many
after
in
rule.
the last 2 years?
It's just crazy. When I started off as a mortgage broker, you used to be able to get 100% financing. You can go to 40 years amortization. There was a whole slew of things that you're able to do. Today, not only are you not able to do that, you have to put a down payment. You're capped at 25 years if it's an insured mortgage. You can go to 30 if it's a conventional mortgage. But you end up in a situation where the landscape is changing all around you nonstop.
There's
right?
more fine print.
Exactly. So us as mortgage brokers, what we need to basically do is help that client negotiate and navigate that kind of that fabric of uncertainty, if you will, of that change. I've had clients where they'll come in and they'll say to me, we went to our bank and our bank pre-approved us for, I don't know, $500,000. And I'll say to them, when did you go to your bank? And they, 2 years ago. Different numbers. No, but we got a raise. Doesn't matter. Let's recalculate this. And then we sit down and we recalculate with the new numbers. Okay, so with their raises, and we add in now the stress tests that the government has put in. And by doing that, they're able to actually get to the right number. Today on the Real Estate Show, we're discussing fact or fiction. What does a mortgage broker do? More in a second.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Eleni Akrivos on CJAD 800.
We're back with The Real Estate Show, and today we're talking about the role of a mortgage broker and what you should know. Fact or fiction? Is it a good idea to use a mortgage broker? Is it a bad idea? I think it's a good idea. What do you think,
it's a wonderful idea. And again, not to put down anybody, because listen, we do work with the banks, right?
Yeah.
And we do work with them. But you know what? The service is just not the same.
Yeah.
What you guys offer, I mean, I see it at the office, the way you take a client from A to Z when they come in, you don't just do a mortgage. I'm sorry. I see you guys, right? You really look at the whole picture. So you know what? It would be nice if you can walk people through What do you actually do when a client comes to see you? Obviously, there's different situations, but there is a process that you guys pretty much do with every client to figure out what's the best mortgage for them.
So for us, there's like I kind of mentioned, we touched about the different facets, right? And what's kind of really important. So the first and foremost, we have to ask the question, why is someone coming in for a mortgage? Mm-hmm. And that's an important question. And people will kind of listen to this right now and they'll be like, what do you mean, why? They're getting
I just need a mortgage.
I need a mortgage. I just need money. That's the answer that the banks are expecting. That's the answer that we've been trained to give. Unfortunately, it's not the reality. You're not getting a mortgage so that you can get indebted to a bank. You're getting a mortgage so that you can house your family. You're getting a mortgage so that you can buy an investment property. You're getting a mortgage. So there's more to the answer than what you think there is. And that is my job as a mortgage broker, and this is what our job at Northeast is to figure out what that why is. Once we've able to figure out what that why is, then from there we could expand on it. Figure out what your goals are. We figure out, how is your credit? For people that listen to the show long enough, they know what the financing triangle is, right? So we go through the three elements that are required when you're getting approved for a mortgage. So we look at credit.
Hold on, Terry. Does the bank look at the financing triangle?
No, they don't. It's Terry Kilakos trademarked 2007. There you go. So we look at the financing triangle where we look at all the different elements, right? So we look at the credit, we determine what's going on there. So we look, if it's good, we're going to tell you it's good. We're going to pat you on the back and we're going to show you what you need to do to make it better. Okay. Unless you have a credit score of 900, which I have seen once. And it was at the tail end of last year. It was with a longtime client of mine. I was so proud of him. I actually got one of the other brokers to come inside the office. We took some pictures together. we pointed to the screen to the 900. Eventually, nice. I'll post that to social media. That's going to be fun. But anyways, so we have to look at the credit. Make sure if your credit is good, we'll show you how to make it better. If it's bad, we'll show you what you could do to fix it. So that's one element. The second element that's looked at is your equity. In other words, how much are you putting as a down payment? Or if you're refinancing, how much are you taking out and how much are you leaving in the house? Now, this is important because that part of the equation, if it's not structured correctly, like I mentioned to you earlier, can literally cost you tens of thousands of dollars over the term of your mortgage. So people are going to come in and they're going to argue over 5 basis points. For example, right? So they're going to say, oh, my bank is offering me 249, you're offering me 244, so I'm going to go with you because you're offering me a 5 basis points less. Well, does that mean that if somebody gives you 239, you're going to go to them for 5 basis points? Let me put it in terms that the majority of people will understand what 5 basis points is. 5 basis points is 0.05%, which means that translated onto your mortgage represents a cup of coffee, a Starbucks, mind you, a Starbucks cup of coffee per month. Mm-hmm. Okay? And depending on the size of the mortgage, maybe it's 2 Starbucks cups of coffee. So people will come in and they'll argue over that, or they'll get bent out of shape, or get stuck on the rate. Yep. Exactly. When in reality, that should not even be a factor, because if you don't set up that down payment correctly, that will end up costing you thousands of Starbucks coffees.
Yeah, so basically
there's
you can
a plug
even
for Starbucks right now.
Yeah, exactly.
Right?
You know what it makes me think of quickly? It makes me think of, real estate and our commission. People get so stuck on the commission, but you're not looking at the whole picture. How much will you make at the end of or how much will you save on the purchase? So I have a feeling that you're actually saving people money.
Exactly.
It's not about, but people get stuck on this rate.
That's right.
So by, I guess, looking at the triangle. So you talked about the 2 points.
So we talked about the 2 ones,
There's
right?
one more.
And then we move to the income. So we look at what your income is with respect to your debt load. Sometimes, in some cases, we'll help people restructure their debts if they have a lot of debts. Other times, and I'm going to say this, and there's a lot of people that'll say, there's no way that you do this, but I actually do it. If I see someone, you got to understand, I literally see thousands of transactions, right? So I've seen over the years, I mean,
you've seen what can go bad. You've seen,
I've seen everything, okay, and I've seen every type of income. I've seen every type of job. Some jobs which I didn't even think existed, but they do apparently.
And the banks don't like certain jobs, right?
They don't, but if I see someone that comes in and let's say, I don't know, they're working somewhere and they're making $25,000, where, 2 weeks ago I had another client that came in and they were making $35,000. I'm going to say to them, by the way, did you know you're getting underpaid for your position?
That's real advice there.
Oh yeah, okay, no, but it's.
Yeah.
I know that it's silly. And then they'll kind of look at me and they're like, what do you mean?
How do you know?
I'll tell them straight out. By the way, this is what you should be getting paid.
Yeah.
If you're not getting paid that, there is a problem. And I've had clients after this conversation I've had with them where they will go in, they will speak to their bosses and get adjustments. And I've had other clients where they'll go into speak to their bosses and quit afterwards. And then go and find something else. And it delays that, end up delaying the transaction by a couple of months.
But you've cared and you've helped, so that's what counts.
Exactly. But we care enough to actually
that's amazing.
To do that. And I don't think that anyone working at a bank or the majority of mortgage brokers would actually do that. I think that this is something kind of unique to Northeast. Now, so once we've assessed that and we've done all that, I'm rambling, but whatever, bear with me here. So once we've assessed people's ability to buy a property or their timeline to buy. So that's important. So either you're going to be buying now, you qualify for X amount of dollars, or you're going to be buying tomorrow for X amount of dollars, but it's going to take this amount of time because of whatever reason. Once we've ascertained that, then from that point, we take the transaction, we take the mortgage, and we send it over to the real estate side. Okay. And this is where you come in, right? So we send it to one of our very capable brokers where we will help you find the right home for your purchase, for your mortgage. So we'll match up the two kind of the two elements together on that part. And for that, we will gladly pay for notary fees. We do all kinds of things to kind of help people out once they're using two services. Once the mortgage and the real estate transaction are done, then at that point our, lovely financial advisors kind of come into the equation, and we pass it on to the financial services side for life insurance, disability, if there's need for that. We look at investment strategies. We do all that kind of wonderful stuff. And then moving on some more, we'll end up taking it over towards the Northeast insurance side, okay, where we end up having, and that's fairly new. I mean, we don't talk about it very often on our show, but we have damage insurance. So we have damage brokers who will help you find insurance policies for the house that you're buying, typically saving you 20% in some cases, 10%. There is a savings. We're brokers on that end as well. So because we're brokers, we have access to all the different banks, which is fantastic. Anyways,
definitely a more holistic, approach to clients. I think clients really appreciate that, we do offer all the services, but the process that you explained in terms of the mortgage and how you start, just that alone, it's not the same as going to your bank.
Absolutely. Next, we'll be talking about the fine print you should be aware of when signing for a mortgage. Now we're off to the CJAD Traffic Center.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Eleni Akrivos on CJAD 800.
We're back with The Real Estate Show, and today we're talking about the role of a mortgage broker and what you should know, fact or fiction. Don't forget, you can always reach us at the office at 514-680-4674 or by visiting our website at northeastmortgages.ca. As well, if you haven't done so already, please don't forget to subscribe to our YouTube channel, which is newsonthego.ca, where you get to see all the fun and exciting stuff that happens behind the scenes here at the station, I think that we have a good time with it. So
all the time.
Yeah, definitely.
Yeah. So if you guys were listening before the break, Terry was talking about the main elements that you need to get approved for your mortgage. He was talking about the mortgage triangle. Guys, it's
financing triangle.
Oh, the financing triangle.
Yeah,
I'm sorry. I thought it was the mortgaging triangle.
This is
Okay. How to get
trademark copyrighted Terry Kilakos 2007.
So I didn't name it properly. But if you want to know more about, how to get the approval and the process, call the office. It's 514-680-4674. But Terry, let's talk about penalties now. So you got the mortgage. We were talking just before about people coming to a mortgage broker and getting different services, but also saving money, right? And structuring things differently. People are stuck on interest rates. They should actually be thinking about something like penalties if ever they sell the house or decide to refinance after 2 or 3 years, which we know happens very often, right?
Statistics show that 80% of mortgages will be broken within the third year, by the third year. If you know that you're going to be paying a penalty, why would you put yourself in a situation where you're giving the bank the upper hand? Something like going with a brick and mortar bank. If you go and you speak to a mortgage specialist, the majority of them are going to say all penalties are the same. Whether you go to a bank or you go to a mortgage broker, the penalty is the same. That is not true.
But they're all mortgages. They should all be the same, right?
But you have to understand something. When you go to a bank, and don't take my word for it, look at your mortgage statement, people. Okay, look at the mortgage statement.
Nobody
and then
reads
come
that.
and see one of the mortgage statements after I set one up. Okay, so when you go to when you go to your bank ABC, Bank ABC's posted rate is, let's say, 534. Okay, so because Bank ABC's posted rate is 534, and you're a good client, they're gonna tell you, well, you know what, we're gonna give you a rate of, 334. Right? So they're giving you a 2% discount off of the posted rate that they have. The reality is that everyone is getting the 334. There's nothing special about you. Okay? Sorry to break it to you. This is the reality. Everyone that's walking in that bank is getting 334 or something close to that. So but they're expecting you to haggle to get that down. When you come to a mortgage broker, that doesn't exist. We don't have that haggling. If I can get you, and I'm going to just stress this, don't call this week at the office and say, Terry said that he's going to get me a 1% for a 5-year fix. That's not what I'm saying. What I am saying is, if I could get you 1% for a 5-year fix, you would have it. You would have it.
You're shopping the best rates, that's for sure.
100%.
But it's more than that.
Yeah. So 100%, you would end up having the lowest possible rate that I can get you. Okay? Know that. So you don't need to haggle. You don't need to, compare. You don't need to say, my cousin got this, all that stuff. You're getting the lowest possible rate for your situation and for your type of mortgage, first and foremost. Secondly, there is none of that. The posted rate is 534, and we're giving you this discount down to 334. 334 is your rate. Now, the way that banks calculate their penalties, they're going to do what's called an interest rate differential penalty. An IRD penalty essentially looks at that discount. They multiply it by the amount of mortgage that you have left, multiply it by the amount of time that's left on the mortgage. As well, they look at what is the discount or what is the new rate that's available that they could put out that money for, and what is the rate that you have. And they do this whole massive calculation and come out with a penalty of $18,000, right? And they say, your penalty is $18,000. And you say, but I don't understand. I thought it was supposed to be 3 months of interest.
I was going to say, most people just think it's 3 months interest.
It is not. It is not. The penalties are night and day between coming to us and going to a brick and mortar bank.
So what would be the difference in terms of the calculation?
Typically, when we do a mortgage, you could potentially pay an interest rate differential penalty. However, the calculation is done very differently than that. There is no discount. So because there's no discount, the penalty is much less. The majority of the mortgages that we set up are 3 months of interest penalty. The majority. You will get the odd one that is a little bit, might be higher, but the majority of them are that.
So, on the penalty alone, just on that, again, people are so fixated on interest
100%.
rates, but on the penalty, on that fact alone, and I've seen it just because on the selling side, I've had, clients, I have a handful every year, and I tell them, okay, we're going to sell your house. We're going to set everything up. Can you do me a favor? Can you call your bank? Because we have to go on the contract that says you're going to pay penalties.
Yeah.
And they're like, oh, well, it's 3 months interest. I say, no, can you please pick up the phone, call your bank, call your lender, and find out what is the penalty. And it's been a handful of times that it's been 15, 18,000.
Yeah.
That's a big chunk out of the proceeds of their sale.
100%. I had a client who 3 years ago decided not to go with us. He decided to go with his bank. And I don't know when I had set it up, I told him, I said, if you go with your bank, you're going to have a massive penalty. I'm not planning on selling the house. I'm not planning on doing this. I'm not planning on doing that. Okay, no problem. Fast forward 3 years later, he decides to sell his house. He calls me up. He says, I'm selling my house. I called my bank. My penalty's $18,500. What can I do? And at that point, he basically, I sat there. I did the calculations. Unfortunately, there was nothing else he can do. Mm-hmm. He was stuck. $18,500. He asked me, what would be the penalty had you done it? $3,000.
Yeah.
3,100 and change, something like that. Crazy difference. Crazy difference.
Yeah.
Ladies and gentlemen, we're out of real estate. I know it's crazy. The time flies by. If you want to reach us at the office, you can call us at 514-680-4674. The lovely Olympia is standing by to take your calls and to basically set up appointments and get you in to get your mortgages secured. As well, if you haven't done so already, please subscribe to our YouTube channel, newsonthego.ca. Eleni, if they want to reach you, how do they get a hold of you?
They can call for real estate appointments, questions, 514-716-6188.
Awesome. Thank you for listening, everyone.
Thanks,
See you
guys.
next week.
The opinions expressed in the preceding program were provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own real estate agent with questions or concerns. The preceding was sponsored content.